Hello traders, Greg here from Master Trader. What I'm showing you here is one of my layouts that I can look at the top-down approach of the broader markets and sectors and subsectors. And connected to that is a list populates. As I click any of these, it'll populate the stocks within that sector. Then within these rows are different scans. So the one that I've highlighted here, the down arrow, shows wide range topping tail bars. And I've got three of them within the S&P 500. That isn't many, so a little bit of a indication of the broader markets. In a bearish market, you'll find lots of these. In a bullish market, you find more bottoming tail ones. The effects that the broader markets have, what do the broader markets do on that particular week, will also have an effect. What I came across is the stock Service Now, symbol NOW. And so that reported earnings last week. And you can see back here, this number here is when it reported the prior earnings, and it had an explosive move up. It gapped up and it continued higher. And I've got the weekly chart down here up towards some resistance, which it stalled there. Stalling there possibly was building a new launching pad, and prices would break out higher since it had a positive reaction to the prior earnings. That's an unknown, but you wait to see, can it actually break out? Now what we see here on this day, which was the 7th, the beginning of the month, we had a wider range green bar that it was an attempt to move higher, and it formed what we call a 1, 2, 3. A wide range bar up, an inside bar, and the 3 would have been triggering by trading above the highs, and we'd look for a move higher. And that would lead to a belief that this was going to run up into the next earnings report. That didn't happen. It actually formed what we call a breakout bar failure, which is a breakout, an inside bar, and then it breaks the low of the inside bar, and it fell all the way back down to support, where at that point it began to rebuild. And so was it just a shakeout, some algo? We don't know, and we're not going to short it with the earnings coming out. This was the next earnings report. When it reported earnings, it gapped up into the prior failure pattern. Now, this beat earnings estimates. And what we would have looked for at that time would have been some kind of consolidation. It may have just broken out, but ideally, because it was at a prior failure area, it would go sideways there a bit and then continue the move up. Well, that didn't happen. It got sold into. So the sellers that were up here reemerged, of course, institutions, the $1,000 plus stock, and knocked it all the way back down on heavier volume. So that's bearish. Now, the question is, does it violate this support, which would open up the door to what we call the void below? The move up, this momentum move, and then this sideways consolidation through time, and then a breakdown would be bearish. In addition to, if you look at fundamentals, beating earnings and then a failure would be a bad sign, obviously. It could be a sign of what's happening in the broader markets. Some say it's overvalued. And this, what we call accidents beginning to happen even on positive news. And this occurrence is short-term bearish. The question is, will it break down below the lows here? So what do you do with something like this? Well, for shorting it in a directional trade, we'd want to see it break down below the lows, that confirmation. Crazy things happen. It could hold here and flip right back up again. The other thing to consider would be on a short-term basis, would be a short-term credit spread, a call spread. So when we see a pattern like this, technically it creates a belief, well, some confirmation that sellers are taking control, but in the short term, a belief that it won't exceed these highs. So you could sell a call spread if there was enough premium. You have to decide how far out you would want to go. If there was enough premium that would expire at the end of this week, great. Short-term basis, odds of going back up there are relatively low. Over the course of 2 weeks, 3 weeks, 4 weeks, you kind of get more into the unknown. But if it breaks down below here, well, then you could start considering buying puts, a bearish debit spread, something that would lead to, okay, it's going to go lower. How do I profit from that? And of course, you could short the stock. One thing I would mention to a lot of traders, I would say, I'm never going to trade a stock in $1,000 range. Well, that is a misconception, because even if you were to trade 10 shares of this and the potential for it to fall hundreds of dollars, well, let's say $100 or more than that, you could make a very decent amount of money. So you can control the risk as well with a small amount of shares. So as we look at the weekly time frame, what we see is that move down created a big down bar. So the retest of that was an obvious place where sellers should emerge, but based on the earnings report, maybe it could have got through it. I mean, this is what we call red bars ignored. I've colored these black. I just like the look of that rather than the other red bars because it's different. I've just applied a wide range bar scan to the chart, and it covers those black and big up bars blue versus being green. So now we've got a wide range topping tail bar, a rejection of the prior highs, a void down below. Question is, will it break down below here? Of course, that's the unknown. I've got alerts signed to these horizontal lines, so I'll know if it begins to break down. And I've got an alert up above too in case it goes back up. So for right now, as far as directional trades, there's nothing to do. But this is how we can find bearish bars on the daily, weekly time frame, earnings that are coming out. Again, I can click on one of these. I can change this to the Dow, and we can see, and you see there's no bearish topping tail bars on the weekly time frame. There is a bullish 180. It doesn't tell me what the trend is. I've always got to look at the charts. But on a short-term basis, I can easily find different patterns that we look for, whether prices would break down below or regain the 50 MA or lose the 50 MA. And again, we could look at different sectors. We could obviously look at the Qs. I'll just type it in there and I'm finding it. The Qs, which have, that's not the Qs, just been kind of grinding their way upward. But what's been doing well, what's been doing poorly, it's relatively easy to find them with this particular layout, which we share with subscribers and students. So for this week, continue keeping an eye on different stocks that are going to be reporting earnings, what the reactions are to them. And as this comes down to support, we'll be watching to see if this begins to hold here. If it begins to go sideways as it did here, that would be a great setup because it would reinforce the inability to raise up off of that support. And then when it was to break down, should that happen, we'd have an obvious place that prices couldn't get back above and place to put a stop and plenty of room to move down. So when we look at charts, as this says here, they're pictures that display traders' belief, actions, and expectations created with money. So while the earnings were good here, they beat here, this was sold into, and that is bearish. And now the question is, can it break down? We'll see this week. Any questions, email me, Greg at Master Trader.